we've seen massive amounts of gold come into the United States, and no one is really talking about it on the mainstream at all, at all. And what does it mean? This is a very big deal. You know, when we look as an example, just to give you an idea of how big it has been, every single month we've seen massive deliveries, massive. And you know, most of my career, less than 1% of contracts that are issued on Comex stand for delivery. In the first 3 days of this August gold contract that just hit the board, 20,126 contracts of gold at 100 ounces apiece stood for delivery. Now, the interesting thing about that, remember I said only 1%. What is really interesting is that not only are, and by the way, that's over 2 million ounces of gold, right? You're talking almost $7 billion worth of gold. Every single contract that was issued in the first 3 days has settled for physical metal. That's 100% a one-to-one ratio. This means physical delivery is actually taking place, not just speculative paper settlement. You're talking 2,012,600 ounces of gold in 3 business days. Now, there's going to be a lot more that settles. We'll see how much more it truly is. But we have seen north of $100 billion worth of gold come into this country since the beginning of the year or since November. And that's just what we know of. I'm sure there's a lot more coming in, not through the Comex, through proxy banks, through other channels where reporting it isn't as obvious or a necessity. And who is buying it is the question. Who has the money to stand in 3 days for $7 billion worth of gold here in this country when that's never happened before? This is 4 feet of snow in Death Valley in July. This doesn't happen, but it is happening. And it's happened every month since November, since Trump was elected. Bigger almost every single month. And August is not a primary delivery month. And yet you're seeing $7 billion worth of gold stand for delivery. 100% of the contracts issued. No, we don't want cash. Thank you, Daryl. We'll stand for our metal. Something significant, hugely significant, is happening with gold. And this is where I think things get a little bit interesting, where you try and figure out what might be driving this. And as far as I'm concerned, aside from the strong intent to take physical metal, what you have driving this, I think, is a realization that the world's exchanges are being bled dry by countries around the world that are sophisticated, are motivated, are coordinated, are wealthy, and realize that holding U.S. treasuries is a dangerous endeavor on many levels. They can be weaponized, like we saw with Russia, and confiscated, with the proceeds largely given to the Ukraine in the form of weapons, a country they were in the middle of a war against. And we're the same country, by the way. And again, I'm not passing judgment on war, and I'm a patriot, and I love this country, and I would vote for President Trump again. But let's just say we're a country that 22 years ago invaded Iraq under the guise of weapons of mass destruction, and they're not there. Sorry, we made a mistake. I know we destroyed your country. Sorry, and we toppled your regime. But guess what? 22 years later, we're still here. So what I would say to you is that the world looks at us as being hypocritical. Much of the world does anyway. And so for us to be judge, jury, and executioner with Russia, to sanction them, kick them out of SWIFT, and to confiscate their $5 billion in treasuries and the reserves in SWIFT is a line very difficult to come back from. And you know, when you're kicked out of SWIFT, maybe that gives impetus to something like the bridge technology, which allows 7-second clearing cross-border with no compatibility with the SWIFT system. So finding a backdoor, if you will. And when you look at gold versus treasuries, the countries in the Southern Hemisphere are dumping treasuries, and they are the ones that usually funded our lifestyle. Japan, China, Russia, Saudi Arabia, India, they're all dumping treasuries for sure. And now China, what used to be number 1 in treasury holdings, is 3. Number 2 is the United Kingdom. You have 2 of the most broke countries in the world buying each other's debt. It's like 2 drunk guys leaning against each other at the end of bar time so they don't fall over. It's just ridiculous. But the point of it is, look at it the last 25 years. Gold has doubled the performance of the 10-year treasury. Look at it last year. Treasury in 10-year was up 4.5%. Gold was up 40. Look at it this year. Halfway through the year, the 10-year treasury is up 2.25%, but the dollar's down 10. So you're talking a net loss of 7.5%. And same time, gold's up 35, 40%. It's a 50+% difference. And so the countries around the world are choosing the safety, the performance, and the removal of counterparty risk found in physical gold and taking possession of it. deliveries of it. You know, we look at what's happening here in Comex. A lot of this gold that's hitting the Comex, most of it is leaving the Comex, which is also very unusual. It's not going into the eligible category in the Comex. It's leaving. So it's called a loadout. We're seeing massive deliveries and a lot leaving. Who's doing this? Same thing is true here in the West, where 40 plus central banks have pulled their gold out of the New York Federal Reserve, which would for 50 years give access to Comex, and pulled their gold out of the Bank of England, which would give access to the LBMA. So they're taking physical possession, removing counterparty risk. So anyways, we see all this gold being delivered. What does it really mean, right? What does it mean? Well, we've had suggestions. We've had President Trump tweet on Easter Sunday that he who has the gold makes the rules, the golden art of negotiating. Now, what does that mean? That's interesting, right? We've seen Secretary Bessent say several things that are provocative or certainly interesting, and that is he's a self-proclaimed gold bug. It was his largest holding when he was running a hedge fund. That he would like to preside over a new Bretton Woods, a new monetary system, and with the passage of the Stablecoin Act, you can agree that we are at least I would agree that we are in the beginnings or in the midst of a new monetary system. Certainly one where synthetic demand for treasuries is replacing organic demand, but we can get to that later. He said things such as, I want to remonetize the asset side of the balance sheet for the U.S. government. Now, he backed off saying it's not gold, because he said that in February, because I think someone said, Scott, what the hell are you doing, brother? What are you doing? We're still bringing all this gold back. You can't say that yet. And the amount of gold that's come in every single month is so crazy, Daryl, that it's never happened before. And so I believe he's talking about gold, because if you look at the $5 trillion balance sheet of the U.S. government, the largest asset of the USG is student debt, 45%. Not going to monetize that. The next largest is military. You're not going to monetize that. You could monetize national parks and stuff, which is third, land. But I'm thinking he's going to remonetize gold. Why do I say that? Gold revaluation, in other words, because number one, it's held in every central bank account in the West, an account called the gold revaluation account. Can't make it up. And it's been done 3 times in this country before, but it is needed. You see, my premise on all of this, Daryl, and you can stop me at any time and ask me questions. Sorry, I'm rambling, but my premise in all of this is that we do not want to be the world reserve currency anymore, no matter what he's saying, and I'll get to that, that we're going to destroy the value of the dollar. And in an effort to bring back manufacturing, which needs to be done, gold revaluation will be part of it. And how am I getting to all of this stuff? That's the part that I want to get to here, but I do believe that. And we'll see if I'm right. You know, a lot of the stuff I said about BRICS over the last 4 years, I was right. And I was the first one to talk about it largely in 2019, 2020. And I got laughed at for a lot of it. People said, you're crazy. And lo and behold, most of it's come true in one form or another. I'm not saying I'm a soothsayer or a magician or have a crystal ball, but maybe I am just stupid enough or have the nerve to say this stuff publicly. So I'll tell you what I actually believe. You know, Vice President Vance came out several months ago and he said, you know, because of Triffin's dilemma on White House letterhead, because of Triffin's dilemma, being the world reserve currency at this stage of the game is probably not beneficial to the dollar. It's not all that it's cut out to be, in essence. And for people who don't know what Triffin's dilemma is, it is an economic theory that says as the world reserve currency, you will always run trade imbalances. Those trade imbalances, by the way, where we expect everyone to take dollars and put reserves in treasuries that President Trump is yelling about to the world, including to our allies in the form of tariffs. That's been an extraordinary privilege, because the act of using dollars for everything around the world and buying treasuries with reserves have kept our goods that we buy very cheap at Walmart and at Target and asset prices high, because they've kept interest rates low with the demand for treasuries and dollars. We've had low interest rates, high asset prices, and very, very cheap goods. So is it really that unfair what's happening? And when Triffin's dilemma says you will always have a trade imbalance because the need for dollars is far greater than what the world can get just simply through trading with the United States alone. They need more dollars. So the Fed has to continue to produce dollars, number one, but these countries need to sell their currency to buy our currency, which pushes theirs down and pushes ours up. So a strong dollar compared to the rest of the world who needs to have dollars to do things in every form creates a situation where manufacturing across the globe is way cheaper than it is here. So it hollows out the manufacturing capacity of a country that holds the reserve status. And this is why we have this trade imbalance, because it's much cheaper to manufacture goods around the world instead of here. So Vance says, look, maybe it's not such a good idea to be the world reserve currency. So I believe, number one, they understand this. And ask yourself, why are we putting tariffs on things like pharmaceuticals when we don't manufacture them? What's the reason for that? It's supposed to protect a industry that really doesn't exist. In other words, what I believe Trump is trying to do is reshore everything. Now, how do you do that? How can you reshore your manufacturing in an environment where we owe $28 trillion in treasuries, Daryl, by 2028? That's what we owe. Those treasuries are coming due. We take in $5 trillion a year in tax revenue. That's $15 trillion or halfway there. But that doesn't take into account the $3+ trillion deficit each year. So call it $3. $9 trillion on top of 28 is 37 with a $15 trillion tax base. You see a problem with the math? I do, and I think they do. Now, this doesn't even take into account things like Medicare and Medicaid and Social Security and government military pensions with their off-balance sheet. We're $200 trillion in debt when you add all this together, with a $5 trillion asset base. So this becomes a very big problem mathematically, and I think they understand this. And if we don't manufacture anything, how do we pay our way out of this? It's tax revenue. We don't produce our way out. We don't produce anything anymore. And I think the nobility in everything President Trump is trying to do is to bring back manufacturing. So I'm going to try and lay out right now what I think this is all about. I think they're going to eviscerate the dollar in an effort to support the bond market. Now, how do they do that? So they do it this way. Number one, you issue a stablecoin bill. And that stablecoin bill, where the hell did stablecoins come from? Out of nowhere, right? The name of my podcast I do is Little by Little. It speaks to the term of logarithmic decay. Little by little, by little by little, then all at once. Well, holy crap. 2 years ago, no one even knew about stablecoins. Now, all of a sudden, you have Secretary Bessent saying we're going to go big on stablecoins, and it's passed into law. Why would they do that? These stablecoins that you will see every corporation around the globe, many of them around the globe, issue that will be backed by U.S. treasuries. You just saw yesterday, JP Morgan is now partnering with Coinbase so you can connect your accounts directly and convert, like, for example, your points from JP Morgan on your credit card directly into stable coins. Everything will be stable coins so that it settles like that, like Venmo, like Zelle, like the M-Bridge 7-second settling. It settles immediately in the name of expediency and convenience. And these stable coins are all going to be backed primarily by U.S. treasuries, which is filling a void, an exodus of organic demand filled by a tremendous amount of synthetic demand manufactured through these stable coins. And all of a sudden, that's the thing that we want. And it is because the demand for U.S. treasuries is falling. Now, why would anybody want to own a 10-year treasury paying 4% if they really knew what inflation was at? The CP lie says it's 3% or whatever, but that's a lie. Go to John Williams of shadowstats.com. He'll show you that add an 8 to that. We're about 11%. That's why they lie about, the stuff coming out of the Bureau of Labor Statistics and then fire the gal the other day because her numbers weren't what Trump wanted after revising the unemployment numbers, maybe the largest ever by 250,000+ jobs in May and June. The point of it is that why would anyone want to buy our treasuries when they see that we're massively indebted? They see that we have no way to get out of this other than print and inflate or default, that they can be weaponized, as we did to Iran and to Russia. They can be sanctioned and taken. You get kicked out of SWIFT. That because, look at the last couple of years, as I mentioned, last year, Treasury was up 4.5%, gold was up 40 with no counterparty risk. Halfway through the year this year, up 2.5, but down 8 or down 10% on the currency. So negative 8% return, gold's up 40. So why own treasuries when you can own gold that is outperforming it, that is going to be the backbone of a new system? I'm going to get to all of this. I'm going to kind of dot the I's and cross the T's, and has no counterparty risk and is outperforming. I think that is what is happening. So on the front end, they're going to load the front end of the yield curve with these stable coins up to 2-year in duration, load it up. And Bessent says we can get $2 trillion a year or more in stable coin usage, probably more. Now, where does gold come into play here? So if you realize we owe all this money, And we're already watching the dollar fall. And there is no way to get there but inflation. Not going to produce your way out. And you go to this length, this synthetic length of creating stablecoins to run the government's engine on the front end. What about the back end? See, how do you ever bring home manufacturing? Remember, Triffin's dilemma says if you're the reserve currency, ain't going to happen. Vice President says maybe being the reserve currency isn't such a good deal. We're issuing tariffs on everyone, including our allies, Japan, the UK, Australia, Canada, Mexico, the European Union. And your friends are saying, what the hell are you doing? Why are you doing this to us? Maybe we're suggesting that we really don't want you to do all of your transactions in dollars. Maybe you use your own currencies and trade with one another. Here's the reason why. Because I think the way to bring back manufacturing, which we have to do, right? 60% of this country doesn't have college education, Daryl, and we have no manufacturing, and we don't produce anything anymore but IT and financial instruments. And that's a problem for a large portion of the country. You're going to have a massive widening gap between those who have money and those who have none. So what do? And this is the nobility, I believe. If I'm right, this is nobility in what Trump is trying to do. So I had Judy Shelton on my podcast 3-4 months ago. And Judy says to me, Andy, and you can go watch it on my Miles Franklin Media YouTube platform, Judy Shelton. She says, Andy, July 4th, 2026 is a massive day for President Trump. By the way, Judy was Trump's, if you don't know by now, Trump's nominee to run the Federal Reserve in 2016, and I think she's in the running for it now. But she said, he told me that July 4th, 2026 is a huge day for him, that it is the 250th anniversary of the United States. And I believe he will roll out gold-backed treasuries on July 4th, 2026. He's told me such. Now, the first step would be to bring in the gold that has been offshored around the world. We are seeing more gold coming to this country than at any time ever, more so than anywhere in the world right now. We are literally flooding the Comex with gold deliveries. Again, $7 billion in the first 3 days of August, but it's been like this the entire year. And yet media doesn't talk about it. Pretty interesting. Who is it? Could it be the Treasury Secretary using the cover of the Exchange Stabilization Fund to protect the country? Don't have to tell Congress if that's the case. Don't tell anyone. Who's bringing in all this gold? We don't know. It's weird that we don't know, right? So the first thing you would do is have to reshore all of the gold. And I said to Judy, do you know, why hasn't it been audited, Judy? And she says, it's held in the New York West Point Mint, the Denver Mint, the New York Fed, and Fort Knox. And it's always being claimed that it's logistically challenged and too expensive. This is where the United States, for God's sakes, audit the damn gold, spend the money. Yes, it will be audited, she says. And then I say, Judy, do you know gold is held in an account called the Gold Revaluation Account? She says, I do.